I'm Charlotte McLeod with the Investing News Network, and here today with me is Sean Fieler, CIO and President of Equinox Partners. Thank you so much for being here online with me today.
Charlotte, thank you for having me.
Yeah, really excited to be speaking with you. And since it is our first time talking, I wondered if you could start out by giving just a brief overview of yourself, your background in the mining space, and your work at Equinox Partners.
Okay, well, let's see. This is the first and only job I've ever had. I started here right out of school as an intern, then an analyst, and now I'm the CIO. And so we're value investors, and I've spent a lot of the last 20 years practicing that better business value investing in the gold and silver mining space.
Perfect. And I want to move on with hopefully a fun question. I believe you were just attending the Precious Metals Summit in person. So I wanted to ask what your thoughts were on kind of the sentiment at that event. I haven't had the chance to attend an in-person event since the beginning of 2020. So what was going on there? How did people feel?
Well, I think people that were there in person were thrilled to once again be at an event in person, and then you couple that with some of the despair of having owned gold and silver mining stocks for the last year. So if you look, just in relationship to other financial assets, or take the S&P, so the S&P is up almost 18% for the year to date. The GDXJ, so the Junior Gold and Silver Mining Index, is down 26%. So you have a 44-45% gap just in the last 8 months in terms of 9 months in terms of outcomes of what's happened between those two indices. And the backdrop you would have thought would have been really a perfect setup for gold and silver, and it just hasn't really played out so far this year.
Yeah, that's kind of exactly what I was hoping you would get into, because one of the things that I keep hearing from people is that they're so surprised that the gold price isn't higher than it is right now. So what are your thoughts there? Would you expect it to be higher based on what we're seeing?
Yes, I would expect both the gold and silver price to be significantly higher. That's not really the question that the stock market's asking at this point, certainly not in gold and silver mining companies. You're being very handsomely rewarded, even at spot prices, to own these companies. And you don't have to own small companies with a lot of exploration risk or idiosyncratic asset risk. You can own some larger diversified companies and still get a sustainable mid-teens free cash flow yield, which is just extraordinary, certainly in relationship to what you're finding elsewhere in capital markets.
Yeah, and definitely we're going to get into your thoughts on the companies right now. Before we do that, I want to ask you kind of the catalysts that you see for gold right now. We have this expectation of a higher price in the future. What are the main drivers at the moment? I know we've got a number of things going on right now, including this week's Fed meeting that a lot of people are watching.
Well, you can't ask for monetary policy to be any more accommodative, or for the Fed to be any more aggressive, or for Congress to be any more irresponsible. So you can't, those all seem to be more than in place, and that would seem to be, from a macroeconomic perspective, really a perfect backdrop for gold and silver. I think the fly in the ointment, so to speak, has been just everybody's been doing so well owning the same assets they've owned for the last 10 plus years, 12 years now at this point, since the lows in the stock market. So if the S&P is going to go up 20+% a year, why come and invest in a niche segment of the market? It's just, maybe it makes sense intellectually, but I think it's hard for people to actually pull the trigger. So I think the catalyst we're actually waiting for is for the more conventional financial assets to perform less well.
Right. And of course, this is a difficult or maybe impossible question to answer, but when do you think that could happen? How do you think it could happen? What's your take on that?
Well, I think there's a lot of kind of late cycle phenomenons going on right now. I've worked through the bubble in the late 90s and the 06 through 08 period as well. What we're looking at today, I think, is, to me, most reminiscent of what we saw in the late 90s, in that you have some very conventional, very pedestrian business models that are getting really extraordinary valuations because they've put some new wrinkle on a very old technology or old business model. So we're short, for example, right now, a car wash roll up at over 7 times revenues. So I know car washes have been around for a while. It's not a business that's undergoing a real revolution. It's a very fulsome valuation for the nature of the business they have.
Okay, really interesting. So let's move over to where you, I think, do see opportunity, which is among the precious metals stocks. You were mentioning offline that right now you see more opportunity in the producers. So maybe we can start with that and discuss why you're looking there right now, or previously you might have been looking a little bit more heavily at the juniors.
Yeah, so I mean, historically, we haven't really owned the million-plus ounce producers because they traded at a premium to NAV. So you were paying not just for the assets they had and their ability to sustain their production, but you were paying for ounces they hadn't really yet discovered. And the market was asking you to do that because it provided the convenience of liquidity, size, expertise, a number of benefits that you get with some of the larger companies. Today, you can get, in some cases, mid-teens free cash flow yields in some of the million-plus ounce producers, which is shocking. So one of the ones that we own that's a million-plus ounce producer is Endeavor Mining. It's a West African mining company. They're very much following in the footsteps of Randgold, which merged with Barrick and became the largest gold mining company in the world. And they're exploiting that same geography, some of the same geology, and getting a huge discount to NAV for all of their efforts, which is kind of surprising. But that's a company today where you get a 15% sustainable free cash flow yield, 5% of which is coming back to you in dividends and share buybacks currently. And so if you take that and compare that with not other gold mining companies, but just other financial assets, it really stacks up incredibly well in 2021.
Okay, so that's an area of focus for you right now. Do you still have some focus on the juniors as well? How does it balance out within the portfolio between them?
Yeah, so still most of our portfolio is in juniors, but once you take a step down to the sub-million or even $250,000 to $500,000 ounce producers, so something like West African Resources or a Dundee. So there, instead of getting a 15% free cash flow yield, you're getting your 20% sustainable free cash flow yield at current pricing. You have very strong balance sheets. In case of Dundee, a large net cash position, and cash flow actually quite a bit in excess of free cash flow. So really some shockingly low ratios when you're looking on EV/EBITDA. So we're talking, closer to 3 than 4 in some cases here. To be in a sector really that's performed certainly year to date poorly, where there's a lot of undervaluation, but this is an opportunity to partner with some really good managements, own some great assets at some very low valuations. And it's really it's a little bit of an embarrassment of riches. You don't really have to look that hard to see some really great opportunities, just because it's been a really tough environment for a lot of the specialists in the gold and silver mining space.
For sure. And I think we can kind of get an idea from the things you've been saying about what you're looking for when you examine these companies. But are there any criteria that you haven't mentioned that you want to see when you're looking at a company in the gold and silver space?
So one of the biggest issues we have is the agency issue, or the alignment with management. So that it's a different issue amongst the larger companies versus the juniors. But are the board of directors and is a C-suite, are their interests well aligned with shareholders? Are they trying to benefit themselves and the company by generating returns, growing the business, distributing free cash flow, and compounding intrinsic value? Or are their interests more spread across a variety of different interest groups, and is scale for scale's sake, or financing, or sustainability in terms of just perpetuating the business, are those competing with shareholder returns, and to what extent, and how do you figure that all out? And so solving that agency issue has been something we've been very focused on, and it's different for the larger and smaller companies.
Yeah, so that sounds like you're kind of focusing on governance at the company, and we hear so much about ESG right now, and the G is, of course, governance. What about those other two factors in there? Are you looking at those as well?
So that's part of every project, whether you want it to be or not. So environmentally, I think if you look at the Canadian and Australian domiciled companies, which are the ones we're invested in, the assets are global. That's where the headquarters are. That's where a lot of the boards are put together. These companies, I think, are by and large incredibly sensitive to the issues around environment and have invested very heavily in it. In some cases, have done gone way beyond what they would even need to do from a legal perspective, just because of their moral take on those issues. And I think for the most part, that's been a real positive, and it's improved their social license to operate in a lot of the geographies where they're active. The actors that tend to be more on the wrong side of certainly the environmental issue are going to be the artisanal miners. So they're smaller miners, local miners that aren't subject to the same kind of outside pressures. And then some of the, whether it's Chinese or Russian or some other miners that are coming usually from somewhere other than the listed companies in Australia and Canada. That's where you tend to find the actors that are pretty far over the line from an ESG perspective. And then they're also, though unfortunately, less susceptible to some of the pressure that interest groups can apply to these companies to get them to behave better.
All right. Okay, that about sums up, I think, your ideas on the gold price, ideas on companies. I wanted to ask if you are noticing any other themes in the precious metals space right now beyond price, beyond what's going on with the company's share price performance.
Well, there is, we have uneven cost inflation. So the inflation that we're dealing with in society more broadly is filtering through to these companies. We see, I think we're still in the early phases of that. I think the inflation pressures in the industry are going to worsen. You still have a kind of in the mining conferences out west last week were a good example of this, where you had a mix of companies trying to argue that they could suppress the price inflation for another 6 months or so, and companies that felt like it was already here. It seems to be escalating more quickly in capital costs than operating costs, and it's escalating more quickly for smaller companies that have less robust procurement processes than larger companies. But I think it won't be too long before everybody's having, experiencing more of that same kind of cost pressure.
Yeah, that's a really interesting one. And beyond the precious metals, are there any areas that you're focused on right now and see opportunity in?
So we have a fair number of investments in energy, so in Canadian natural gas and oil. Those companies, like the gold mining companies, are shockingly cheap. They are it's hard to say it's a bear market because they bounced so hard off their 2020 lows in the spring of last year. But there's still very much of a bear market mentality, and the multiples that you see in that space are kind of rival the multiples you see in the gold and silver junior mining space. So you can get cash flow yields north of 25% and sustainable free cash flow yields well into the mid to high teens, which is, again, surprising. And that is on not even on spot pricing, certainly not spot pricing in terms of what we have in natural gas.
Great. That wraps up all my questions for you. But just before we finish, are there any final thoughts that you would leave the audience with as we head into the last several months of the year?
Oh gosh, I don't know. I think there's a lot to do. If you're not already invested in the space, it's a great moment to take a hard look and kick the tires and find the junior or senior. Really, I think it can be kind of your choice as to which part of the space you want to get involved in. But you can never say these things. These companies can't go down more. But it seems like a particularly attractive time to take a hard look and find some of the better value.
Perfect. Well, thank you so much for being here to speak today. Great to have you on.
Thanks so much for having me.
Once again, I'm Charlotte McLeod with the Investing News Network, and this is Sean Fieler.